The Swiss drugs maker Novartis has raised its profit outlook for the year, crediting its success with a new breast cancer treatment for better-than-expected results.
Operating income was up a fifth to just under $6 billion in the 3 months to the end of June. Sales climbed 12% to $14 billion. Novartis is also repatriating production of medicines sold in the US back to American facilities.
Well, these strong results come against the background of a challenging time for the pharmaceutical industry. President Trump is threatening 200% tariffs on drugs imports from August. Let's talk to Fiona Cincotta, market analyst at City Index. Fiona, welcome back. Good to see you. So we've mentioned the breast cancer drugs, obviously significant, but what are the other key drivers behind this strong performance by Novartis?
Yeah, so I mean, they saw really strong total sales, as you mentioned, up 12% to $14 billion. And I mean, that's strong growth that they saw across their priority brands. But as well as strong revenue, we've also seen disciplined cost management and also favourable FX dynamics. And that's all gone towards helping increase profitability, as you noted, quite substantially.
So the big question is, what are the implications of Mr. Trump's new tariffs on companies like Novartis?
Yeah, so I mean, you know, expectations are that these could actually have a very big impact. We could see prices increase significantly. Now, interestingly, they've actually said that they don't expect there to be a near-term impact because they say they have adequate inventories in the US for this year. So a lot actually depends on how quickly and at what level tariffs are implemented and how quickly they are ramped up, if they are ramped up. Now, as you also mentioned, they're going to see a sort of repatriation of manufacturing facilities, spending around $23 billion in order to get sort of manufacturing ramping up again in the US. So, I mean, these are a lot of costs that there are going to be involved. This is a massive disruption that we're looking at. But they're saying near term, they don't expect there to be an impact, which is why they've managed to increase their outlook for 2025. But I think looking out into 2026 and beyond, there are definitely headwinds building.
Well, Mr. Trump suggests that companies will have a year or more to adapt to any new tariffs. Is that going to be realistic?
No, I don't think so. I mean, a year in terms of sort of, you know, these huge businesses is not that long. These businesses have their supply chains that they've had set up. Now, obviously, they are making adjustments and preparing themselves for such changes, but there is a lot of uncertainty still. You know, we've been waiting to hear, will they, won't they? When will this start? What will be the prices? So, I mean, there's a lot of uncertainty that's very difficult for these companies to price in and be able to plan for. But a year in terms of being able to relocate a whole lot of manufacturing to the US is not that much time. And if that does need to be done quickly, it's obviously going to cost much more.
I'm sure all these companies have already war-gamed and scoped this, but let's say US tariffs do move ahead. How might that reshape global pharmaceutical supply chains, especially when you think of the Swiss and those EU-based companies?
Yeah, so I think what we're going to see is this relocation of manufacturing. I mean, in order for these companies to be able to sell in the US at profit, they are going to need to be able to have manufacturing in the US. And so that's what we've been hearing about is sort of, you know, this investment into manufacturing in the US, which is what President Trump is actually looking for when he says he's looking to build the manufacturing base of the US. So I think that's going to happen. And then we're just going to see a sort of rerouting, if you like, of those drugs. They're going to need to be manufactured in the local locality in order to be sold in the US.
Fiona, good to see you. Thanks for coming on the programme again. Fiona Cincotta, the market analyst at City Index.